We've gotten some key earnings reports from retailers in the last few days, and I think it tells us a lot about where consumers are spending their money right now. Here we have a table that just shows the same store sales trend for a number of retailers and then a couple of restaurant companies as well. So you can see here, Walmart growing pretty well, growing faster than Target. I think that indicates that people are looking for maybe a few more deals than they were a year ago. That's why they're outgrowing a company like Target, but 2.9% growth is not too bad for Target. On the home front, RH, which used to be Restoration Hardware, is guiding for a 1% to 3% decline in same-store sales this current quarter. They reported a little bit earlier in the summer. I think that's really telling about where people are spending money in the home. You can see there that Home Depot is actually growing pretty well, but Lowe's essentially flat from a year ago. So maybe people aren't spending quite as much on furniture or even home improvement. But the numbers are still kind of mixed there, given that really solid number from Home Depot. The really telling one that I see here is Darden Restaurants and Dave & Buster's. So this is restaurants and entertainment, double-digit same-store sales growth over last year. That shouldn't be all that surprising given the fact that we're coming out of a pandemic. People are spending more time going out to eat. Even if consumers are cutting back on spending elsewhere, maybe you go out and splurge a little bit at Dave & Buster's to take the kids out because they haven't gone out as much as they maybe normally would over the last couple of years. We don't know if this is a short-term bump in sales in mid-year this year and maybe we decline in 2023 or 2024. But for right now, it certainly looks like people are spending less money on their homes, spending more money going out to eat, and maybe trading down a little bit to cheaper goods like Walmart. I want to take a quick second to thank this video's sponsor, The Motley Fool. Check out the link in the description to receive their 10 best stock picks to buy now, or go to fool.com/Rive. That's right here. You can check that out, fool.com/Rive. It helps the show. So what does this mean for investments right now? Well, let's take a look at these companies. Target, I think, is still doing really well. They had 9% growth in their digital sales. That's the drive-up orders, pickup orders, and then shipped as well. So I really like what they're doing. Walmart is clearly benefiting from people trading down to lower cost goods. So they're another solid retailer. I like that big box space right now. Home Depot is obviously performing well too. And if you're interested in home improvement stocks, Home Depot is definitely the better bet than Lowe's and really has been over the last couple of decades. Where I would be a little bit more cautious is in that high-end retail space and then restaurants and entertainment as well. We're obviously seeing RH having a little bit of struggles in the second half of the year. It wouldn't be surprising to see those numbers get even worse because home sales are dropping. So it would make sense that people are buying less furniture as well. On the restaurant and entertainment front, they're seeing costs go up not only from a food side, but also from a labor side as well. They do have solid revenue at this point, but I wouldn't be surprised if the economy moves along here and we maybe move into a more recessionary environment. We're hearing more about layoffs across the U.S. These companies may not be in such a strong financial position 6 months or a year from now, so I'd be a little bit more hesitant with those right now. I think at the end of the day, keep it simple. The big retailers who have been doing really well for a really long time, Target, Walmart, and Home Depot, is really the safest place to have your money at this point.